Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So we are able to hear me. Hi everyone. So we have come to the second part of tracking the forex market together. So I will give you the link for the live market code page to start with, so that you can open it in your browser and view where exactly the market is. Then I will start explaining with regard to what the positions we have taken and what happened to those positions. This is the link for the live market code page. You can open it in a browser. I'll just display the slide again. So we had the tracking the forex market part 1 between 10 and 10:45 GMT, and during that time I was giving certain trading decisions, and what happened to those trades we will review, and what happened to the high and the low in each of the pairs what we have observed with regard to majors and the commodity pairs, and see what happened to those highs and the lows, whether they are breached or not. Then subsequently we will decide upon the next set of trades for this particular US session. So I'll go back to that of the slide. So the forecast was Euro and GBP are expected to swing and slide during the European session. So based on that, we had taken the sell positions in the case of Euro. And I took a sell position in Euro at 1.4846. And subsequently, I explained how exactly you have to keep hedging order 30 pips above in order to limit the risk to start with. So the hedging is placed instead of a stop to limit the risk. Then when the market does not hit the hedge, then when it starts showing the profit in the original sell positions, then we can simply remove the hedging order and keep stop at entry so that we don't make any loss. So that's what I did. And entry stop was removed and stop was placed at entry. And subsequently, towards close of European session, they made the drop. And they came down to that level of 47.85. Sorry. I think now you are able to see the slide. So I took a sell position in Euro at 1.4846 and kept an entry stop at 48.76. And subsequently, when that sell position was making profit, then I kept stop at entry and removed the hedging order. So I eliminated the risk first of all, so that in the event if the market goes against me, I will not lose any money. Then subsequently they started sliding towards close of the European session. Then I started trailing down the stop manually, and the market was subdued. So it formed the low of 47.85 and did not cut for about 30 minutes, 10 to 30 minutes of observation. So I closed it around 47.89. So 57 pips profit was realized on that. GBP, I kept SL order at 65.72. And market was coming up to 65.53, and again it was dropping to 65.35. I did not take a modified sell there. I know that it will be a trap. So I just left the order as such. Still, even now it has not been filled. Then subsequently, when you come to the next session, we have to remove the order, review the market again fresh, and subsequently place the sell order or the buy order depending upon the market condition. So this is how, if you try to do within the session a trade, it will be a very good swing trade. Then I was taking a position 1.0167 in the case of USD and that was a market position when they are trying to cut the low, and subsequently they formed a new low at 1.0158, slightly about 9 pips below that, and I kept 30 pips entry stop that was not filled. Then I removed the entry stop and kept stop at entry when it started rising. The high is 1.0239, and when it came closer to that of the high, when there was a talk of S&B intervention, immediately it was jumping up, and I quickly booked profit as a swing trade. Then it was about 58 pips profit. In the case of yen, I was expecting, or I was explaining that there will be a downward stop, and before making a rise, even now it is expected, because if you see in the live market code page, Euro is showing net change of 26 pips negative, and GBP is showing a net change of 27 pips negative, and USD is showing a net change of 32 pips negative. So that means they wanted to make a contrarian move. During the drop of Euro and GBP, they will drop USD also. That is referred as contrarian move. That is, when Euro and GBP makes USD gaining move, and USD will be making USD weakening move. That is a contrarian move. So why such contrarian moves are being made in the market? In order to handle the yen crosses. So then automatically you come across Euro yen and GBP yen. When they made a rise about 250 pips yesterday, they started correcting. So this is how the players make the extended move on one day. The very next day, they keep the market very cool, slowly slide, and see that they are able to really book phenomenal profit with regard to their lower level buys, and also build sell positions and drop the market and book profit when they let loose the market. And the traders find that, okay, holding the buy position is of no use. When they start liquidating, the market erodes, and subsequently the players book profit. Day in and day out, the same thing happens. They have several attributes for that they probably call the economic or the fundamental news, or they call the technical news, etc. And let me ask one single question here with regard to the fundamental news. When UK GDP data was announced, GBP went up to 1.67 area, and from there it came down to 1.63. Fine, because the GDP was very poor. So obviously when it was negative, GBP has to drop. We are able to understand. But when US data was announced and US GDP was announced, which was positive. So a normal sensible person will say, okay, US GDP data is good. So obviously US dollar has to gain. And UK GDP data is weak. So obviously GBP should not rise. Whereas they raised 250 pips GBP and came back to the same level. That means UK GDP data is discounted. So what is the big fun in following such data? So this is what they try to create, and that is why I gave in the blog the comment that one day risk aversion. On Wednesday there was a risk aversion move, then Thursday there was a risk appetite move, and again today, Friday, they are going to make risk aversion move. And either they call it as a risk aversion move, or whether they call it as USD gaining move, or whether they call it as drop in Euro and GBP, ultimately what they do is rise one day and drop another day. Then the third day they rise, and fourth day they drop, and give several attributes. So as traders, if you try to give more importance to them, then obviously you will be misguided. You will not be able to understand why it is dropping suddenly, why it is rising suddenly. So this you need to understand. So USD CAD, I kept a buy limit order near the low and 5 pips above that of the low. That was not filled, and I wanted to improve and buy it, but I did not buy it because in your absence I did not want to take much position. And with regard to US AUD, I kept a sell limit order 91.69. I was explaining 91.74 is the high, and subsequently they are not coming there. Towards close of the webinar, it came down, it came up to 91.56. Then I took a sell position there, I showed it, and subsequently kept stop at entry when it started dropping to 91.11, and subsequently AUD dropped further down to 90.74. When it was making a pullback, I found that, okay, that is the initial low. Then it has not been broken during that European session, and afterwards the gap time is going to start. So subsequently I booked a profit at 90.87. That profit was 69 pips. So this is how you will be able to do a swing trades in the market. So I'm not trying to say that what I have taken a decision is correct or not, but still I'm using the hedging order to limit the risk. And see, we may do several estimates, and during that process of estimates, we might be able to find that our calculations might go correct, or sometimes it may go wrong. See, the probability is always there, and the level of probability only varies with regard to various types of analysis. And ultimately, even if there is 1% chance or 0.1% chance that forecast can go wrong, then obviously you need to have the measure to limit the risk. Ultimately, we are risking our money, and we are not in the market just to become addicted to trading, but we are in the market to make quick money, because which cannot be normally earned in a normal job environment. So now I'll go back to that of the highs and the lows. If you see, I'll display the live market quote page. You can see that Euro has cut the low. Earlier low was 1.4785, and they have cut the low, and they are staying below that of the low. And actually, up to 14 GMT, they are not cutting the low, but they are holding it near that of the low. But it would have been a sell level 1.4812, 1.4805, and so. But still, I was not recommending, because I want you to understand what is basic trading strategy. And subsequently, when they cut the low and when they come above that of the low and stay there, or if they stay below that of the low for 30 minutes, then you can take a sell position there, which is referred as a technical trade. So 1.4785 was the earlier low. Now, if you watch, even 30 minutes, they will be holding below that. Then even at 1.4781, if you try to take a sell position, you will be able to see profit during this particular session. And with regard to GBP, net change is negative, and in the case of Euro also net change is negative, and USD Yen also net change is negative. So they wanted to make contrarian move, drop more Yen crosses. And also, if you see the net change in the case of Euro is 41 pips negative, and net change in the case of GBP is 44 pips negative. I'm keeping the camera on the live market quote page and trying to explain how exactly we have to review it. And when USDN also showing a net change is negative, you can understand that there will not be any big drop here, and they will alternatively drop Euro and GBP and subsequently drop Yen, and that sort of moves will be seen. You can slowly watch and try to earn out of that. And let me just take out the camera from the live market quote page and place it over that of the PowerPoint presentation. So, as far as the high and the lows are concerned, only the low has been cut, the high has not been cut. That is indicated from start of the session, 30 minutes from the start of the session. The session starts by 13:30 GMT US session, and 14 GMT is the start of the webinar. Probably we started it little late, and then till the time 30 minutes they have not cut the high, which indicated very clearly they wanted to drop. And now you see that whether I give a trade call or not, you see the drop happening there. So if you are able to understand that, okay, how exactly the market will be able to simply read it, understanding the intentions of the player. Some may attribute that because of the data it has dropped. Whereas in the morning, there was a data pertaining to GBP, and that was negative. At that time, GBP was going up. And now, the data pertaining to US has been released, and people said that it's okay, fine, it is up to the expectation, but still fine-tuned readings have been given and things like that in the earlier webinar, you have noticed. And finally, what has happened? Now, Euro and GBP, they are dropping. So this we are able to read from only the live market quote page, not from that of the economic data and reading into that. And why I am telling it, you can use it for your academic purpose. As long as you are a trader, you need to know, are they going to drop it or are they going to rise it? That is the most important thing for your trading decisions. So with regard to the session timings, then European session we have seen 8 to 8:13 GMT, and from Monday onwards it will be 8 to 14 GMT, and 14 to 14:30 GMT will be the gap time from Monday onwards. But today it is 13:30 to 20:30 GMT is the US time, US session, and 14:30 to 21:30 will be the US session from Monday onwards. The gap time timing is also given. The gap time moves or false move, I've been explaining it many times, and if you got any doubt, you can ask me pertaining to that. Then I will explain the basic trading strategy because the market has already moved, so I do not want to jump into a trade. When there is a small pullback, I will try to take a position, still show you profit there. Watch the forex market in all the 6 pairs, 4 majors and 2 commodity pairs, 30 minutes from the start of the session. That is what I have been explaining from 13:30 to 14 GMT. And when the market is near that of the high and not cut the high during the 30 minutes of observation, you can take a sell position. When the market is near that low and when it has not cut the low in that 30 minutes of observation, you can take a buy. As far as US session is concerned, there are certain data release around 14 GMT. So during that time, obviously the players will be making some up and down volatile moves. So to be on the safe side, what you can do is wait up to 14:10 or 14:15 GMT. Still, if they are not cut the high and come only closer to that other high, you can take a sell position. So you will get a better opportunity if you wait up to 14:10 or 14:15 GMT because there is a data release after 30 minutes of the market start. The timings are all pertaining to that of the big players, as I explained earlier. Then once the position makes profit, first of all, as soon as you take the position, keep 30 pips entry stop or a hedging order. If the hedging facility is not available, you keep the hedging order in the respective crosses. Suppose you are taking a sell position in euro, you try to take a buy position in a currency pair, a cross, wherein euro is a numerator, like euro AUD or euro GBP and things like that. So you can try to keep a buy limit order 30 pips above that of the market. There, I'm not asking you to straight away take a position there. Keep only an order, like a stop. So in case if the market goes against you, if euro rises, then obviously you will find your euro sell position will be making loss. In that case, your buy order kept in the euro cross will be filled and that will also make profit. That will make profit. As a result, you will find whatever the loss you come across with regard to euro sell position and a corresponding amount of or less than 30 pips amount of profit will be shown in the case of the hedging order. Thereby, you need not be worrying about the position. In the hedge order, you can keep stop at entry, and once the hedging is closed with stop at entry or with a profit, whichever way you decide to close it, then you can come back to the original position and try to close it with a minimal loss or with a nominal profit or stop at entry or maximize the profit the next day. So there are various other opportunities available if you hold the position. If you simply keep a stop and if the position is stopped out, you don't have any position. You have to re-enter into the market. Invariably, the human mindset is such that once you are stopped out, you lose your usable margin. Then you hesitate entering into the market. So this is the best way. Using the hedging, you will be able to limit the risk and also use it for your trading strategy. Then once the position makes profit, you don't require the hedging. You remove the hedging order and keep stop at entry and try to trail down and keep a limit of 30, 45 or 75 pips depending upon the type of momentum you come across in the market. If the market is subdued, if there is a spread between the high and the low, if the spread between the high and the low is less than 75 pips, then you aim for 45 pips profit. If the spread between the high and the low is more than 75 pips, then aim for 75 pips profit. So then you will be able to definitely get that. That is how you will be able to identify the momentum in the respective currency pair. It is not that all the currency pairs should show that extensive momentum. And sometimes euro they will be holding it for a longer time throughout a session, and only GBP they will be making up and down move, and that is mainly to focus on euro GBP. In such a scenario, then you will find the spread in the case of euro might be lesser when compared to that of spread between the high and the low in the case of GBP. Then we try to trade GBP at that time. Wherever the momentum is more, if you try to take positions, you will be able to quickly see profit in that. But your entry decision should be correct. And if you try to take a sell position near the high, even if they rise from there, maximum they can rise will be a net change of about 150 pips in the case of euro and 250 pips in the case of GBP on a normal day condition. So you will find invariably that your higher level sell positions will be making about 100 to 120 pips negative or loss. In case if you use the hedging, you will be able to see that the hedging is making corresponding profit less than 30 pips. You are blocked in the hedging. And once you see that that particular high has been set like yesterday, afterwards they are not breached that particular high, in the case of euro 1.4862, and they are not gone above, then you find that lower high has been formed and that has not been broken. Then cut. Then you understand that they don't want to rise more and they want to offload. Then you try to close your hedge position with a profit and try to lower down the hedging order because that position get exposed without a hedging order. Once you close your hedging with profit, then you trail down the hedging. Once the original sell position makes profit, you keep stop at entry and trail down the stop in the position. So I am recommending trailing stop when the position makes profit and use hedging order when the position makes negative or loss. Now, what is the expected move in the case of US session? So, in US session, Euro and GBP are expected to make swing and slide for weekend. So, we are going to see the slide, and already some slide has happened. So, what sort of trade we are going to do now? So, Euro, they have made a drop, and you know that earlier high was 1.4785, if you remember that, and this is very important. So, you try to keep a sell limit order 1.4782 with an entry stop of 30 pips. So they will make a pullback and try to hit it because all the session throughout 8 hours or 7 hours they cannot continuously drop and they will make up and down moves, and if the buy orders are not available at the lower level, they will quickly pull back or pull the string so that euro will come to 1.4782, but they will see that those who have bought around above that of the low are not booking profit. Only then they will come for distress selling the lower level. So they know how to trap the traders effectively, and for that they don't require any sophisticated statistical calculations, and all they need is just to know the high and the low. So we will also follow the same high and the low and try to read them. So in the case of GBP, they formed a new low 1.6489. The earlier low was 1.6507. So we will keep a sell limit order 1.6507 with an entry stop of 30 pips. So you might be thinking that how he is taking such a risk and selling lower than that of the low. See, the focus is that there's going to be a drop. Subsequently, I am using a hedging order to limit the risk. I am not just like that emotionally trying to take. I am only keeping a sell limit order. And in the case of euro, it's about 30 pips away. And in the case of GBP, and instead I will not try to do a buy and sell trade. If they hit my sell order, then it becomes a position. Then I will try to take the profit. So unnecessarily, I will not enter into the market just like that and become panic later on. So in the case of CHF, they have already raised above 1.0250. This is a psychological level they want to breach, and second time they have breached it, and straight they will take it to 1.05. You will be seeing it fast and with a gap. So we will try to take a buy position 1.0254 with an entry stop of 30 pips. So you will be wondering that I am giving the call against that of the basic trading strategy. So it is not a basic trading strategy here I am doing. It is a technical trade. When they cut the initial low and go below and stay below that low for more than 30 minutes, then any level closer to that of the low, if you try to take a sell position, you will have a definite profit. This is referred as technical trade, but that particular trade, you should try to close it within the session. Keep it in mind, all the rules of the game. Then in the case of GBP, I kept 6507. They are coming up to 6505. Probably if they fill it, fine. Otherwise, we'll modify and keep it as 6505 and try to take it. and CHF, I had taken a buy position here at the market level and kept a 30 pips entry stop. In case if it is hedged, and definitely they will go lower than that, I'll be able to keep stop at entry. Once they come back, in case if they want to make a brief stop and then come back, I'll be safe enough and keep the hedging order. And once the hedging order is filled, I'll keep the stop at entry. And once they come back, I'll be able to see profit in my bar position. So this is how you have to view the hedging. And if you become jittery with the hedging and it's trying to make profit and things like that, in the hedging, in case if they fill, probably you may be facing a loss of about 2 pips, 5 pips, 10 pips. But if the original position is closed beyond your expectation, then you might be closing it with 30 pips, 50 pips, 60 pips. And that is much dangerous when compared to that of closing a position with a nominal loss. So in the case of USDN, and still they are not gone above that of the initial high of morning. So I will try to keep a buy position, buy limit order 90.55 with an entry stop of 30 pips. So there was a question in the morning why I decided to keep a buy order at 90.55. So initial low in the case of USDN during the Asian session was 91.18, and still they are holding below that of 91.18, and they formed a new low 90.85, and still since they similar to that of euro, as a technical trade, they are holding below that of the initial low of 1.4785. So in that case, I am trying to sell at 1.4782, 3 pips of given for the spread. Okay. So in the case of USDN, I am keeping it about 30 pips below, so that in the event if they make a quick up downward stop and then rise, because normally what they do is they will hold USDN and drop Euro and GBP. As I explained, they are going to make a contrary move. Still you find all the Euro, GBP and CHF, the net changes are negative. So if after dropping Euro and GBP for some time, they will drop USD-Yen. So in order to drop further down Euro-Yen and GBP-Yen. So in that case, they will try to fill my buy order. Afterwards, if I try to take a buy position, still I'll keep a limit. My risk will be minimal. And because I will not try to straight away take the low, because they have been holding it below that of the initial low for more than 2 sessions. And in the case of Australian dollar, you find the initial low of 0.9095, and subsequently they formed a new low 0.9074, and they are keeping it closer to the top 0.90. They are keeping it around 9075. So I will keep a sell limit order 0.9083 with an entry stop of 30 pips. So the concept is the same, that they formed the low 0.9089. I'm keeping it 5 pips up below that and of the initial low, because they formed a new low and they are trying to hold near that of the new low, and they are not going above, and they wanted to cut the low. Already they made a net change of 75 pips negative. So a small pullback might happen, and if it is not happening, then I can take a sell position in the market and they will drop it. So in the case of USD CAD, already it has gone up by 146 pips. So if at all, if I try to take a buy position, I can make only 50 pips profit in that, because the spread they can do is only 200 pips net change. So I'm not going to think about taking a buy position in USD CAD, because the profit opportunity is only 50. In that, probably I may be able to grab about 20-30 pips. So this is how you should be able to review, taking into consideration all the information available in the live market code page. And that is pertaining to the current trade. I'm not trying to dig, okay, what happened in 2008, what happened in 4 months back, or what happened last week. Because what is going to happen in another 2-3 hours is more important for our trading decision. Then with regard to GBP-yen and Euro-yen, you find already they had dropped about 100 pips. So it is not advisable to take positions now because, as I told you, that USD-yen they are going to drop and Euro-yen, Euro and GBP they are going to drop. They will make further drop in the case of yen crosses. After the drop, once they stop cutting the low for more than 2 hours during the mid-session, as far as the crosses are concerned, the players handle the majors during the start of the session and end of the session, and during mid-session they handle the crosses. At that time, if you try to take sell positions during the mid-sessions or sell or buy position during the mid-session, by end of the session you will be able to book profit. Now GBP has become a sell position. They have filled it. I got an entry stop there, and they came up to that level of 65.11. Now currently 65.08, 65.12 is the quote. So euro they are not filled it, and during the European session, I was not getting the GBP filled, and now euro I am not getting it filled because while I was talking, it has already made the move. So anyhow, in case if you miss that opportunity, don't become frustrated and try to enter into the market at any level. That is a very wrong approach. And you always keep in mind, market continues to give trading opportunities. If not a sell and buy trade, I can do a buy and sell trade after the drop. So anyhow, ultimately what is important for me is making money from that other market. I'm not going to be worried whether he is going to drop, or I'm not going to be worried whether euro is going to rise. It is a worry of the respective government. So I am only interested in trading. Okay. Probably I did not spend much time in giving answers to that other questions. So I'll go through the questions. These are all the orders. You can keep a note of these orders. And there are some questions asked. I'll be able to recollect those questions now. May not be able to read the exact quote of the questions. I just minimize the slide. Probably I'll keep the camera on the top of the quote page so that you will be able to see that. Meanwhile, I'll read the hotcom window, the questions. There was a question asked with regard to USD and how I had taken a decision to take a sell. I think I already explained during the webinar on what basis I kept a buy limit order lower than that of the market because the net change is negative and they wanted to make contrarian move, and not other very many important. Okay, how you got 47.82 in the case of euro? I explained that 47.85 is the low earlier during the start of the US session, and they cut the low by 14:12 GMT, and subsequently they did not go above. They have been keeping around 47.82 for 10 to 30 minutes. If you become expert, within 10 minutes you will be able to read it. And until you try to understand how they are trying to trap the traders, you wait for 30 minutes. Afterwards, take a sell position below that of the low. This is called a technical trade. And in this sort of technical trade, you have to close it within the session. The next session, they may reverse it. Because when they find predominant of the traders have done the short covering of yesterday's short, they have done the short covering and turned long because of the US GDP data, which has been spoken so much, and everybody was telling that the risk appetite is going to be phenomenal. Then obviously the traders have completely covered the shorts and turned long. So once the traders turn long, there is no point in rising the market for the players. If the players want to earn money, then they have to drop and induce the traders to liquidate the long. So this is how the market sentiments continue to change. That is what I was giving in the blog, that risk aversion, then risk appetite, again risk aversion. So earlier people used to say it as US bulls and US bears and things like that. Those terminologies are gone. Then subsequently the markets, the currency markets have been related to that of the stock market, gold market, etc. Then people are talking about Euro bull and Euro bears and things like that. And subsequently you find that risk aversion, risk appetite are the current terminologies. And again you will come across new terminologies will come, but ultimately they all imply to that of either up move of Euro and GBP or a down move of Euro and GBP. So in order to make it interesting and novel, probably they try to use different terminologies. Okay, D was the price action in to reveal intentions. Right now, feel 50 as price action starts to go positive on the euro. As far as the session trends are concerned, they don't change the trend within the session every 10 minutes. They only drop, hold, make a small rise, then drop again. Then that is how every 30 minutes they will try to cut the low. When they stop cutting the low, it doesn't mean that they are going to reverse and rise. They only hold it for the traders to keep lower level buy orders. Those who have gone short, probably they would have kept the buy order at 1.46. Then they will say, okay, you are not going to see 1.46. Come on, you improve your order. Then obviously out of fear towards the close, they will try to keep a order at 1.4725 or 1.4755 or 1.4735. Then they just fill it towards the close. Ultimately, what the players want is they want the market to drop so that they will buy again against the sell what they have taken yesterday. So it is a continuous play, and if you try to understand the play within the session or within the day and things like that, you may not be able to understand it fully. And it is a monthly cycle they do it. Okay. Can you please explain about the spread between high and low, and from there determine probability of how much profit we can expect? Yeah. Okay, as far as the limit profit taking level is concerned, you try to see that spread between high and low. Now, in the case of euro, the spread between high and low is 1.4752, the high is 1.4857. So about 100 pips is the spread. So in the 100 pip, probably the session started around 1.4815. Then from there, if you see, hardly about 65 pips. So in a 65 pips in the US session, how much of profit you will be able to earn? Probably 45 pips. Try to keep a limit of 45 pips. And if they come closer to that as a limit, and try to move the stop to protect 30 pips profit and lower that limit to 75 pips level. And if they drop, fine, you take it. Otherwise, if they hit your stop, fine, you accept 30 pips. So this is how you should be able to maximize the profit rather than in one trade, if you're seeing the position is making about $100 loss, the second position when it makes profit of 10 pips, you grab it. So this normal trader psychology, the players know very well that the traders, when the profit is seen, quickly they grab it as a scalping trade. When they have that loss, they continue to hold it. Instead of holding it without any protection, try to hold it with a hedging. That is a better proposition. Okay, can you explain entry stop again? Entry stop is nothing but an order. In some of the trading platforms, it is offered, not in US trading platform anymore now. Probably they may reintroduce it after about 6 months or so when the accounts get dwindled in US. So in that, if you have got a sell position in the case of euro, then you want to limit the risk, and 30 pips above, you keep a buy limit order. And that particular buy limit order will be a higher level buy, and instead of differentiating from that of a limit order, it is referred as entry stop. And once you keep it, in case if it is filled, you will be holding both the buy position as well as the sell position. So you can keep either 30 pips entry stop, or you can keep about 45 pips entry stop, depending upon the amount of risk you can afford to take. 30 pips is optimal. That is what I recommend. So in the event if the entry stop is filled, you have to handle the entry stop like a person who has taken a higher level buy. And afterwards when they drop, you try to handle your sell position as if a person has taken a sell at the same market. Because the transaction in the market happens if somebody sells and some other person buys it. Okay, Eric has got a question. Euro USD sell limit 1.4782. At the same time, you put a buy limit in 30 pips above 48.12. Is that correct? Yes. 30 pips above will be 48.12. Correct. So they stop cutting the low and they are firming it up. Probably you might find Euro order could also get filled. You can either keep a limit order or simply watch when they come up to that of 47.82 and beyond that if they don't go, then also you can take a sell. And just because I want to demonstrate, I am keeping the order, limit order. Instead, you can simply watch the market and keep a mental order. Once it comes to about 47.82, I'll take a sell decision. If they go above 47.85 and stay above for more than 30 minutes, I'll try to take a buy again. So what the drop what you have seen is a false move to drop and hit all the stops before making a rise. So this is how you have to read the market using the live market code page. So once they stop cutting the low, try to watch how they are handling the earlier low. If they are not able to go above that of the earlier low, then they will continue to drop. If they go above it, that means they have dropped and hit the stops of the buyers and subsequently they will firm up and induce the lower level short sellers to improve their buy orders. Then afterwards they will drop it. So this is how they handle from time to time based on the open orders placed in the market. Can you explain contrarian move? Contrarian move is nothing but some set of currencies showing USD weakening move and another set of currencies showing USD strengthening move. Because if there is a US data, then obviously the data should give an impact with regard to all the currencies, either a bullish rise or the other currencies should strengthen or other currencies should weaken. See, now the US data was released and subsequently you find that Euro and GBP are dropping. Fine. Okay. So they are moving in tandem. Why USD yen is also dropping? That means yen is becoming stronger. Then people say that simply there is risk aversion, so everybody is investing in yen. Yesterday yen rised very quickly and everybody is coming out of yen and buying stock, and afterwards stock market started correcting and everybody is selling Euro and GBP. What is happening in the market? Can anybody take the money and invest in, put it in, take out the money from that of US and putting it in US? Obviously, if you ask the bankers, they will give only that account reflected the next day. Within 5 seconds, they will not show the money and afterwards you will not be able to pull out and put it elsewhere. So the currency conversion trades, if anybody is doing, you can ask the bankers whether they will do such sort of conversions for you. So obviously these are all predominantly attributes and they try to use it in order to convince the traders, okay, because of this the market has moved up or because of this the market has come down and things like that. Okay, what is the time frame for the current filled orders, please? Okay, as far as the current filled orders are concerned, we will keep it for about 30 minutes and if it is not filled, we will remove the order, and if it is not filled till end of the session also, we will remove the order and review the high and the low, and depending upon the market move, watch for 30 minutes of the market and try to keep a sell order or the buy order depending upon the market. And also you have the gap time. Gap time moves or false move. If they make a quick drop during the gap time, you try to buy. Then during the first 30 minutes of the session, they will rise. You will be able to book profit. So every time frame has got different type of trading strategy. You need to understand. All the time we will not be doing sell and buy trades in Euro or buy and sell trades in Euro and things like that. Depending upon the type of market moves will decide with regard to the type of trading. Your forecast, it is not used. Can your basic trading strategy use independent? Yeah, one can use the basic trading strategy. I've been giving during every tracking the forex market together webinar. Probably you can. This is being recorded. You can just use it. Otherwise, you can take a screenshot when I show the slide again. The methodology. You can just try it out in a demo trading platform. If it is suitable for you, you can do it in your real account. Okay, when you will close your losing position. So I try to book profit in every position I take. I use the hedging order, and when I use the hedging order, either the original position or the hedged position should be making profit because the market cannot be static all the time. And I handle the hedges sometimes and try to book in the that is, handle the hedges with keeping stop at entry or book nominal profit and try to book profit in the original positions as well. Sometimes I close the original positions with about 60-70 pips loss. Still 40 pips profit will be blocked in my hedged position. I try to maximize the profit more than 70 pips. So I earn net profit in the other way trading. So it depends upon the market move. I have different trading strategies. I will deploy the trading strategies without becoming panic. See, we all do distress trades once you become panic. We are not able to think properly and we are not able to act and take a trading decision, and we only look for somebody to hold our hand and try to help us. Instead, you think if at all anybody can help in this world, it is only yourself. If you are hungry, you can only eat. Somebody else cannot eat on your behalf. So obviously, if you have got an unfavorable position, you have to think how exactly I'll be able to come out of that using various concepts of trading. And you know pretty well, market means swing. It will always make up and down moves. They may say several stories, but ultimately it will only make up and down moves. And during that up and down moves, how exactly I'm going to limit my risk and maximize the profit. This should be the pure objective instead of comparing this market with other market, trying to get clue from elsewhere and things like that. That is not going to help us anyway. Unless and otherwise, you are able to take a decision. Okay, I'll go by my decision. Then you will find that definitely you will be able to book profit of that. Okay. In the example in euro, if the price moves very fast away before you could take a position, could you go after the price? No, I don't chase at all. That is a very wrong attitude. So invariably, many people think that we can do a breakout trade that way. So they know very well, the players know very well, people will try to jump into the running bus. Then later on they rise and seize that travel and reverse it. Then obviously you will realize that at the highest level you are taking a buy position like a fool. So don't try to chase the price. You always decide or determine the level and see whether the market comes closer to that. Then you fine tune the price depending upon the market condition. Just you can modify it only about 10 to 15 pips, not 50 pips away from your original decision of things like that. And that should have a very convincing plan for you. Okay, they cut the low, they have stayed below that low for more than 30 minutes, and now still they are holding it there. So any pullback, when they come closer to that of the earlier low, let me watch, and if they are able to hold there and drop without going above in less than 30 minutes, then I'll try to take a sell position. This is how your trading plan will be. Similarly, if they hold near the high and they have not cut the high in your observation of 30 minutes, then try to take a sell position. Watch that there is no data release and things like that. In case if there is a data release and that is used as a trigger time by that of the players, and the volume will be less because predominant of the traders wait for the data to be out. Afterwards they take the position in tandem with that of the data, and sometimes you find that they make the fake moves and trap such traders also. So the players are much more smarter than that of the traders. See, earlier what happened, the traders used to unwind the positions before the data, and later on after the data they try to take the position. Subsequently they found that okay, it is not working well, so why not we take that positions after the data release. But nowadays what the players are doing it, they don't make a false move before the data release or make a small dip and things like that. They make a quick rise in tandem with the data, and people think that okay, it is going to rise because the data is positive and people try to take a buy position. They fail to book profit. Then you see that they start dropping it and try to show them, sorry, you are taking a higher level buy. So the players know very well how the traders, herd of traders are going to take positions. Accordingly, they will try to change their plan, but they cannot do anything else other than acting in a very cunning way. So before making a rise, they will make a quick stop and downward stop and then rise. And before dropping, they will make one quick upward stop and then drop. So they can only earn in the financial market in a cunning way. If at all by investing money they want to earn money without converting into effort, then the only way is cheating or cunning way of acting. Okay, Ritesh. Market code page is used for intra-sessions trade decisions. Do you use market code page for medium or long term? No. Market code shows only intraday. And if you are able to note down in the Asian session webinars, I explained that if you note down the initial highs and the lows on a daily basis, then you know that how exactly they are making the moves in the market for a week and for a month. Then you will be able to understand what are the months what are the weeks they are showing trend reversal, what are the weeks they are showing trend moving, trend moves, etc. So in order to confirm all such moves, I am using the algorithm to develop the long-term forecast for the down the line 1 year and things like that. And you know that I have given the webinars pertaining to the forecast for the year 2009 on 29th of January. If somebody recollects, probably will be able to read it. And I was telling that Euro and GBP will rise when they were around 1.23 and the GBP was around 1.35. People are telling that you are simply bullish without understanding the entire world is under recession. Now they will be able to understand how the players have created havoc in the market and subsequently they reaped amorphous wealth. Okay, I'll talk about Monday move later on, not now. Okay, what about the bigger players taking out another player? See, it is a consortium of players. So it is not a tug or a fight between two sets of players. There is no bull and the bear in the market. Please understand that if I got a buy position only after a rise, I can book profit. If the bears continue to sell and the bulls buy it, and how the bears will come out of that market. These are all positions taken in the market. Obviously, the positions are to be closed in the market. And they are all leverage trades. So they are not physical conversions of currencies. There will be several such attributes, for you to believe. It is up to you to believe it. So you as a trader, if you are bearish, probably you try to sell and try to buy afterwards. You have to buy against yourself. No? So if you hold only a position, you will be able to liquidate the position. Okay. If one were to put a limit order to sell €1 at 1.4782, would you please place a stop loss order for buy €2 at 1.4812? Yeah, that is referred as a double stop. And that is another trading strategy. If you are trying to do this sort of trade before the data release, because after the data release, there could be a quick upward spike or a downward spike. With the help of the algorithm, we'll be able to find out what are the spike times. And also at that time, I'll use the double stop. Otherwise, I avoid sell and buy trade there. And when they dip, I try to take a buy during the false move and try to book profit during that upward spike. You have to understand the type of moves in the market, then trading becomes much easier. I've been explaining about the type of moves in the market, but everybody is focusing only with regard to the levels. It is unfortunate. Okay, or the players, the big banks, do they move that? The players place their orders through big banks, but they are not big banks. They are bigger than the banks. I don't want to talk about the players. That is not my intention. I want the traders to develop a trading idea and make use of it to earn money from that. I already taken about 10 minutes extra, so I do not want to take much more time. So let me display the slide again. So this is the order. Still it is not been filled. 47.82 I kept it, and this order is filled. GBP has become a sell position, and if you calmly wait, that you will be able to see that they are able to fill. And if they are not filling it, you just forget about the trade, because if there is a subdued move, there is no point in taking a position and simply holding it and expecting it to drop at least 5 pips, 10 pips and trying to do scalping. So scalping is the one that sort of trade will induce you to become impulsive. Avoid scalping and try to earn at least 30-45 pips in a single trade. Try to give about 30 minutes time frame between trades and review the market from time to time. It's not that you need to watch the market 24 hours. You can just watch during the start of the session, end of the session. If time permits during the gap time, then you will be able to understand how exactly they are making the moves in the market, and try to make a note of the high and the lows which are set here. And if they breach the low, make a note of it. If they breach the high, make a note of it. You'll be able to really understand rather than looking into the chart, because the chart gives a linear representation of the time frame. Whereas in the live market code page, you find exactly the market up and down moves in a single point. You'll be able to understand whether they are near the high, whether they are near the low. And in case if you are using a 5-minute chart or a 10, 15 minute chart, 30 minutes, invariably the calculations for the chart formation is taking the average levels of those points and trying to show the extreme levels as noise, but actually the noise or the killing points for us. And if you keep a stop there, and they would have stopped you out, but if you see the candle will not be nowhere near us. So we have to give importance to that of the stop runs. And besides the stop runs by the players, the platforms also make their own stop runs and call it as a spread. So you need to keep into consideration all the constraints and then try to trade, earn money. That's the best way of earning money from that other market. Let me display the basic trading strategy. So these are all the session timings. So you can take a screen print and subsequently copy it in a Word or a Paint and try to take it. Otherwise, it will be displayed on Monday in the blog page also. And this is the basic trading strategy. You can take a screen print, or it will be shown in the recorded format. So there again, you can just read it. So I take this opportunity. These are all the positions. This is the forecast I given, and these are all the. Only one position is being filled. Let us review later on what happens to this. I kept a 30 pips hedging order, and once the position makes profit, keep stop at entry. And if you stopped out, fine. You forget about that particular trade and wait for the next opportunity to trade. Not that we will be able to grab all the swings in the market. We are able to take an optimal profit from the market by doing about 3-4 trades in a given day, and we are able to quickly book profit. You should be happy about it. And avoid over trading. If your equity is about $10,000, try to take only 1 or 2% of your equity, the positions, so that you will avoid becoming panic. So I take this opportunity. Thank everybody who have come here to listen to my talk. And I am giving this particular talk mainly to benefit the small traders, for them to get rid of the market fear, and not for any other personal motive. So I take FX. I sincerely thank FX Street for giving me this opportunity and present this Tracking the Forex Market Together webinar for several months. I think it is more than a year I've been doing it. Thank you all. See you again next month. And I will continue to meet you during the Asian session webinars from Monday onwards. See you all. Bye. Thank you. Wish you happy trading.